All right, guys, so good morning to you once again. This is KEL on the 15th of May 2025. Crazy Market Talk with KEL. Now let's start the session. But before that, disclaimer apply as usual. Yeah, okay, thank you. All right, now today we will redo this thing called the review of the PTP indicator KFC. I realized that yesterday, that version itself we did not record. So I will do it again. So for people who have heard it before, if you don't want to hear anymore, it's fine. But today, because of it's a recap, right, I'll do a bit more extended version. I'll show you even more in depth of how the KFC work on different market. So it's up to you, yeah, whether you want to stay on to listen or you want to give it a miss. All right, thank you very much. Okay, so let's go something very, very important first. And this is something that I want to show you. Okay, so yesterday until now, some people have been asking me this question, KEL, is the US bond market important to America? Since that the Federal Reserve is most likely going to bail them out. Now, let's put it very simple in this manner. So, US is a country that import, yes. US import more than they export. That's why the trade deficit is there, okay? Now, why is that so? I think probably you should understand the people there ain't productive in terms of manufacturing. And of course, maybe the status class of the people there, they don't feel that they should become a factory worker. And the cost is expensive. So a lot of companies like Apple, like IBM, all these companies, they put their factories overseas, okay? And that is how they basically manage the manpower costs and stuff like that, okay? So now you should know that there is this article whereby someone asked a question regarding what's the cost of a Hermes bag. That's like 45,000. And the cost in China to produce that Hermes bag is only $600 to $1,000. So imagine the bag that China produced, say $600, is being sold by the American for like 45,000 to 48,000. So this is a big price disparity, okay? And next itself, right, as you also know that, okay, the iPhone that we are using, it costs now $2,000. The cost to manufacture itself apparently is less than 100. So that is how insane the price differential is. Okay, now put that all aside. Now the thing is this right now, if the Federal Reserve will definitely save America, because the biggest customer of Federal Reserve is America. So the thing is this right now, if America run out of money, the Federal Reserve will definitely print the dollar. They will not send in money, they will just print the dollar, then they pass the money to the US by buying the auction of the bond market, buy over, and then America will have the money. So when America have the money, they can pay their dues and pay their debts. And when that also happens, right, the stock market will recover again. Okay, that's fact. But the thing is this, back then itself, when America is doing that, the 5 years ago, that was during the COVID period, America was paying at almost 0% interest rate. But now they will have to pay at 4%, 4.5%. Now they have to pay. Okay, now they will have to pay. So that's why Warren Buffett, right, been buying the 3-month, 6-month treasuries bonds from America. Yeah, been buying. And then he get the return at 4 to 5% per annum, but divided by 3 or 4. So that's the reason why it's like America is paying a very high interest because of that. So that's the reason why Donald Trump wants to reduce the interest on themselves so that the money that they borrowed will be much lesser in terms of cost. That's how it is. Okay, so don't worry that the bond market will crash. It will go down, but it cannot crash. It will go down. So let's look at the chart again, everyone. So you can see right now the bond market now has continued to fall. The day I told you it was 88, right? Remember last week I told you it's 88. Today already at 85, and it's still likely going to continue because you see the volume is still there. Of course, you may say, but KEL, the indicator at the bottom itself is screaming for recovery. True. But then, my friends, if you look carefully, it's good to always be objective in a certain way. You look at this right now. This period, can you see? This period was almost a month. And you can see from the very first time, the market actually, the market hits below the oversold region until the recovery. Can you see this? The whole thing went down by how much? Let's take a look. It went down from 92 all the way to where we are right now. So which means that the market can be oversold longer than you can imagine. Okay, So where are we right now? We are somewhere almost the same thing. So some of you may say, maybe this is a triple bottom already. I say it is possible. But the thing is this, back then itself, right? You remember, there were no tariff involved. Today, we have tariff involved. So it's another thing altogether. So I suspect there will be a rebound in the near term. I'm pretty sure there will be a rebound in the near term, but then likely we may have to see a spike down event first. And if the spike down event do come in, there will be a shakeout in the stock market. Then after that, then the printing machine maybe began, or people think it's oversold, they come in heavily to buy the bond market, all this has happened. Now, one thing to note, you will ask this question, KEL, if that's the case, can I buy the bond market now, since the anticipation is that the interest rate will go down eventually? That is wrong, because remember, bond price and yield is different, yeah? So if the yield continue to go up, right? Okay, all right, then the bond market price will go lower. Unless the Federal Reserve cuts the interest rates, cuts everything, then the yield will drop, then the bond price will go up. So look forward if the moment you will see the Federal Reserve give hints that they want to cut interest rates. But again, from where we are looking right now, it seems that they're not going to cut interest rate in the near term. Just go to this website called the Fed Fund Target Probability. Okay, or simple is CME Fed Watch. Okay, you just click on that. You'll be able to see the latest sentiment of the traders in it, and then tell you that the traders are, most of them are, I mean, the sentiment here is much better than NFP sentiment. It's much more accurate. So the next FOMC meeting is 34 days later already. Yeah, 34 days. What's the last one just passed, ma? Okay, so we move down. You will notice that now, as of 18th of June, that means our next Federal Reserve meeting, right? 18th of June, okay, the current interest rate now is 4.25 to 4.5, okay? 4.25, 4.5, actually it's just 4.25. So you can see that at the moment now, 91.7% are expecting June number to stay. That means that from now till June, they do not expect the Federal Reserve to cut interest rate. Okay, so this one, I'll tell you two things to watch out for. Number one, if this number start to go higher, then confirm for sure that there'll be no rate cut for June period. The market will get stressed up. But if suddenly this number do come down, then what happened? There will be a probability of rate cut, right? Then most likely the pressure point is either tariff or the stock market. So if the tariff, maybe Donald Trump again go crazy again and tell China, look, 30% not enough, let's do it 50%. Wow, then the whole thing will go crazy. That's one. Or two, then if not, then the earnings of the companies start to go very bad. Then the Federal Reserve afraid. Now, Federal Reserve is only afraid of two things only, inflation and unemployment. So if the inflation is high, they will increase interest rate to make sure the cost of borrowing is high so that people don't borrow, people don't utilize it, and then after that itself, inflation can be so-called melted down. But conversely true itself, right? If that actually happened, that means that unemployment increase, that means people get to lose their job. Then the Federal Reserve will pump money and then encourage people to borrow money to stimulate the economy. So if the market, if this number 91.7 start to come down dramatically, right? I can tell you that it is because the stock market is coming off very strongly. And when that happens itself, right? You should know what to do next. Okay. So this is something that I want to share with you so that you can learn this from here. Because I do get a question on this. Now I look at 30th July, you see that the rate cut become possible at 34.2%. That is about 34.2 by July. If you look at September, it's very strong. It's at 48.7. And you look at October itself, right? It's almost like for sure there will be a rate cut by October this year. Now, if the market is away for October, I think Donald Trump will go crazy. So I don't think so. If you ask me, most likely it will happen between July period or September period. If you had to put a gun on my head to tell me which number that I think very strongly, I think by 30th of July. I think that will happen by then. Okay, all clear? If all clear, press number 1 right now. Now again, I'm sharing all this because I want you guys to benefit from it, and you can see very clear that the bond price, the bond movements and the Dow Jones, actually they move in tandem. But of course, recently, because of Donald Trump thingy with China, you can see that the Dow Jones went up, but the bond price come down. Usually they move in tandem, yeah? You can see that they move in tandem. All right. So the thing is this right now, we have to see whether who leads who, but I got this gut feeling that likely the Dow gonna pull back in near term. Okay. All right. So let's look at the market right now. Thank you for waiting. Okay, you can see right now the gold price has continued to fall around. Now, 3175 was a KCB last long time ago, and yesterday we saw it trigger it and close slightly above 3175. This morning it was stabilizing above 3175, but now it is dropping down quite fast. So I think some of you have seen some of the people say they are looking for the KCB to drop until 3082. Wow. 3082. Now, seriously, I don't know whether can we go there or not by today, but then again, this number is there. And if you just insert a simple oversold oscillator like RSI, maybe, let me just show you. RSI, where are you? RSI, oscillator, okay. Relative strength index, and we just make it as usual. We do it as a 14 period. You can see that, okay, wait a minute, yeah. On, yeah, change the levels coloring. Okay, you can see that we are now at a level where usually the market will bottom out for a while. Yeah, here, here, and here. Okay, so I suspect that there might be a halfway mark here. So everyone take out a calculator. Okay, just try it for fun. Okay, now this is a chocolate bar that is 3082 and close at 3175. Okay, so let's try that. 3082. 3175. Okay, you take 3082, and then you plus 3175 divided by 2. What number do you get, everyone? Let's try. 3175 plus 3082 add together, divide by 2. What number do you get? Okay, Nigel is very fast. Tisha, thank you too. And the number you're supposed to get will be 3128. Yeah, thank you, Iman. Okay, so we just round truncate away the last number, 3128. Yeah, okay, press OK. So that will be the number that I think the gold price may stop if they're selling to come down. So I already put in a buy limit order at 3129. I always buy a bit ahead of time, a bit kiasu. All right, so 3128 is the technical level, the mid-level point. So I basically put a buy limit there. Now I'm buying this just because I feel that gold long term is a buy anyway. So that's why I don't mind. As I bought 3175 yesterday. This morning I sold off already. And after that, now I don't know. It breaks below, so I don't do anymore. So I'll get 3129. Okay, clear? So let's put on there. 3128 is the midpoint. So you can buy at 3129 and so forth. Okay, all clear? Okay. P2 is 3129. Is it? Wow. Okay, I didn't know that. Okay, let's take a look. Yeah, if all clear, press number 2 right now. I didn't know that. Thank you, Nigel. We'll take a look shortly. Okay, so now let's just look at the goal itself. Oh, yes, Nigel. Well done, Nigel. Okay, wow, really indeed the what we can see on the screen, 3129 is actually the pivot 2 level. Wow, okay, okay. Oh, it's in, okay, it's in the crazy app. Thank you. Okay, so 3082, 2982, all the levels are there. Okay, now guys, this is where I always remind you, you must follow your trading according to plan. Yesterday, I was telling you that if the gold as long stays above the previous high, previous low, the gold may rebound, right? Okay, that was what I said. But I also say the same thing is that it has to turn yellow, then can buy, right? So yesterday, someone actually complained and said, KEL, I buy gold and then it went down. I'm like, which part of the color you see was yellow yesterday? You must come together as a package, my friend. The market must come down first. Yes, I agreed. The market has to rebound with a higher low. I also agreed. But the word that I gave was very clear. It has to turn yellow, right? So how did this thing turn to yellow in your opinion? Okay.
Now, throughout the whole day, there's no way the day chart turned yellow. No way, because I was there watching the screen. There's no way it turned yellow yesterday. Yeah, correct. Okay, so this one is out of the question. Next, there is a KCL here at 3236, which is actually here, guys. So this is from the color change with the KSI combination. So you can see that yesterday the market broke below 3236. No matter how, it's a sell already. Don't need to wait already. Okay, so now the thing is this. All right, you can see that just nice. Pivot 2 happened to be roughly at the midpoint of the KCB. So maybe as this, what we know, 3129 is a support level, right? Maybe it may be a hit and recovery. I don't know. Okay, we'll set another alert at 3129. Okay. Good guys, well done. Okay, so for me, definitely for sure, right, guys, I think we can buy gold in the near term, okay? Because we have seen this many times before, whenever the KCX turns to green, the market will be selling, then you have to base out for a while, okay? And then once it turns yellow, you are almost and say that this trade will be a pretty decent trade. So now we have the whole setup that is red. The yellow hasn't come out yet, so we just have to wait long. Okay, we just have to wait. And then this trade itself, right? You can see every time when the market rebound, it will always go to the previous high. So the previous high is here, which is about 3450 area around there. So which means that if it turns yellow, okay, wow, guys, we can have a $300 move, my friend, around there, lah, yeah, plus minus, yeah, $300 move, okay, what? And that's a lot of money. That's why I say we were waiting for KCX, waiting for so many days. Finally, it happened. Then you're telling me now you want to go heavy short on the market. I say, huh? Don't make sense, right? Now do heavy short now at this point right now. Don't make sense, yeah. Okay, can want a short, small short can, but not heavy shots. Yeah, that's too late already, lah. Huh? Okay, all clear. If all clear, press number 3 right now. Okay. All right, so next one is the Dow Jones. Yeah, because I spent a lot of time just now on the other markets. So today, not much time to do everything. Okay, today, why am I so adamant on the sell? Because I told you never fight the pivots. So today, the OP is 42,013. The opening already below pivot 1. Although this is an inverse pivot, but the reactiveness is still the same. And because the opening price is outside the pivot already, right? So the market will react according to the OP. And I told you, right, the first TP level will be 31773. All right, 3173. We're not too far away. I think by maybe 3 p.m., 3 p.m. to 4 p.m., we should be able to see this number triggered. 41773. Why? The Europeans. All right. So if the market now maintain about 41,850 to 880, I think that's fine. By 3 to 4 p.m., we likely will see this thing happening. Let's see whether I'm right or wrong. Okay. Let's see whether I'm right or wrong on this particular thing. All right. Now the thing is this: the market will not come down so fast. Why? Because the KSI, the KCX, all of them are, yes, they're all green. KSI is green, KSX is black. So please don't expect the market to crash, okay? It won't crash. It just go down slowly. There will be rebound. They'll be coming down again, blah, blah, blah. Okay? All clear? If all clear, press number 4 right now. Wow, we have 425 people online now. That's cool. I mean, a friend of mine telling me this, KEL, your analysis is not too bad, but how come your people so little bit? I say that, what to do? Not handsome enough. Yeah. Okay, now let's look at the next market. That will be the Bitcoin. Now, this morning, very rare, I talk about Bitcoin, right? And I share with you Bitcoin and the Dow Jones have a very interesting relationship between them. So if the Bitcoin is coming down, naturally, the Dow Jones will come down. I've been saying this for the countless time. Now, today, there's no pivot. Why? Because that is how the setup is. When the setup behave like that, there's no pivot, okay? No pivot. So no pivot, do what? Use OP, OP will be the guide. As long as the market stays below OP, it's a sell. And today, because the KSI is red, confirm sell. So if the Bitcoin is coming down, then I can tell you Dow is coming down. Hey, KEL, why don't you talk about NASDAQ? Why NASDAQ you're not mentioning it? Because NASDAQ, if you notice recently, the NASDAQ is going up on its own. The boys are pumping the NASDAQ all the way up because of the tariff. Now the tariff is out of question, right? So the costing to the technology company is much lesser. So the boys buy back into those technology companies.
All right, that is why the Nasdaq is moving on its own. S&P is more towards Nasdaq a little bit, so moving on its own. So we concentrate on the Dow instead. Okay. So if the Bitcoin really come down, how low can it go? Yeah, to 98,000, because there's nothing else really, ma. There's nothing else can use. The KCB is even further away. So I think 98,000 is fair enough already. Need more crazy people. Yeah, Terrence. Yeah, let's get more crazy people in. Okay, all clear? All right, last one, currency. Just do a quick one on currency. Okay, currency-wise itself, the dollar yen is coming down as I expected because the dollar is retreating. Once the dollar retreats, then of course the dollar yen would follow. So now dollar yen is coming down. I told you it will come down. Even though the KSI, KCX are all bullish, but remember we follow the OP rule, and as long as market stay below OP, it will be a sell. Okay, so where can it go? It will go down to 145.50. Now, which means that the dollar is strengthening. I repeat that the dollar is strengthening. Okay, why? Because people basically buy the dollar in anticipation of certain things that are going to be bad. So one thing to take note of that, yeah. So it's going to be a bit confusing to some people, but just follow the chart to be fine. Okay, guys, we'll take a short break for 1 minute. We'll come back to do the KFC for the PTP indicator. All right, so if you have heard it before, you think it's enough, you can give it a miss. Okay, see you later, guys.